Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Tuesday, the 19th of February. Hello, Tanner. Hello, Mr. B. Great to see you guys. Hope y'all had a nice 3-day weekend. It was relaxing, and you're ready to get right back into the swing of things. And good afternoon to you, Marie. Great to see you as always. Just kind of a little bit more of the same today in the stock market. Of course, I don't need to tell anybody here what happened with gold. We'll talk about it when we get there. Hi, Patricia. Great to see you. But really just a little bit more of the same that we've grown very accustomed to as of late in the overall market. Looking ahead to earnings, surprisingly, we have quite a few S&P 500 companies reporting either tonight or tomorrow before the open. Not particularly huge names, but here you can see tonight after the close, you've got Verisk Analytics, you've got Cadence Systems, Host Hotels, so a handful coming out here tonight. And then tomorrow before the open, you've got a CVS Health. That's what we're looking at right there. Whoops. No, I guess it helps if I... You guys can probably tell I'm still trying to make good on this old emergency mouse because I've not made it to the store just yet. I don't want to go to the mouse store. I'm going to have to. I'm going to do it one of these days. Until then, I'm going to complain a lot. So CVS kind of to top us off here tomorrow. So definitely some earnings still on the horizon. Not the huge name companies, but certainly a fair number, with it being, quote unquote, out of earnings season, if you will. So great to see you, Six Nobleman and Javier. Hello, Javier. Good to see you, my friend. Hope you're doing well. Always great to have you here with us. Taking a look at the S&P, a little bit, maybe tried to sell a little bit on the open this morning. Market wasn't having it. Really just kind of crept up all day long, showing good, solid movement. Now, and we've seen this fairly regularly throughout this run. Those last 10, 15 minutes of the day, a lot of profit taking. Hasn't done anything to persuade people to let it carry over into the next day just yet. But I do find it interesting that, once again, it kind of end of the day, I was day traders, probably, I would imagine. But, I guess we'll never know for sure. But overall, just continues to show great strength, great resilience. We're getting closer and closer to that 2,800. We're within a stone's throw of it right now over in the S&P 500, closing just shy of 2780 here today. Of course, we know that that is a big round number. We know that that is, roughly speaking, a previous resistance zone, although probably a little bit closer to 2820 for actual number. So I think the right approach is to kind of just call it a zone for the time being. Is it 28? Is it 2820? Let's just say it's thereabouts. We're not at resistance yet, but we are getting a little bit closer to it as we carry on this bullish momentum. But still a little bit of room before we start to have to think about what are we going to do at that resistance zone. NASDAQ still just, and again, not a lot of, ton of movement today. NASDAQ still having a hard time just getting that last oomph, that last push through that 200 period moving average, which has ended up being a little more of a challenge area than I anticipated. Other areas of the market really didn't have a big issue pushing through. NASDAQ, for whatever reason, has had that happen. I still don't expect it to be a major level of resistance, just like our other indexes. I still don't see any sort of sell signals. Everything is still to the bullish side in my mind. But I would like to see it push through this to maybe give the market a little more oomph as well. Now, the Dow's the interesting one, I think, because depending on where you're calling resistance, we've either broken it, if we're looking at this resistance from back here. We're knocking on the door if we're looking at the high point back in November, or we've got a ways to go if you're looking at the actual high point as resistance. So this is going to be, and I'm not sure which one you should be doing right now, or I would tell you, this one's going to be interesting. Depends on what the market wants to do, right? Right now, I think it's pretty clear that the market wants to run the behavior that at least I think it's been showing. I don't expect these, the high from, the intraday high from November, I believe it was the 30th, but it might have been December 3rd, the day after the summit. I don't believe that's going to be a major level of resistance, but we'll have to keep our eyes on it as we move forward. And then the Russell just kind of keeps trucking along as well. We're getting very, very close to that old resistance level and that 200 period moving average. Again, it's flat. Am I overly concerned about it? No, but we've seen it can cause some sort of at least short-term slowing down, right, in the NASDAQ. So we'll definitely want to keep an eye on that. Got a little room to run between here and there, but it's going to be challenging that resistance zone. It looks like very, very soon, probably this week. Now, we know that the Russell has had challenges before, most recently at 1550, and, well, it won that fairly easily. A little bit of a pullback, but then pushed right through, and we've basically been running ever since. That's going to put us just shy of 1590. Of course, 16, nice round number, so definitely a ballpark that we want to probably be keeping an eye on as a potential little bit of profit-taking zone or resistance catalyst. But we have a little bit of room before we get to that location. Over in materials, we were able to break and close above that resistance that we, of course, put in January and really fought with, last week, pushing through here today, closing above that resistance level. I interpret that as another bullish signal. A little bit of upward movement tomorrow is going to make me feel pretty good about confirmation. And in my mind, at least, really smooth sailing until we work into resistance and that 200 period moving average just about 56, a little higher than $56, which again, on the ETFs, maybe not a ton of money, as we know, as we're getting to know these ETFs, or if you trade them, you kind of know how they work. But that kind of translates to room, in the individual sector. At least I believe it does. So I like this as a bullish signal. You guys know me. I always like to see that follow through. I'm big on follow through. I'm always going to feel better the next morning if we take out that previous day's high. But we have to break resistance to get to that spot. So I definitely like this as a potential bullish signal. We'll see where we are tomorrow. A little bit of upward movement is going to make me feel pretty happy as a potential bull. Over in energy, just a little more of the same, continuing to hold that breakout. Not a ton of movement here overall in the sector today. There was a little bit, but most importantly, I think, in my mind at least, is another day above that breakout point. Every day above that breakout point, in my opinion, short-term or short-ish term, is a bullish signal. It might need to consolidate, it might need to pull back a little bit, and it might just pop tomorrow. But every day above that breakout point, I believe, is a little more bullish confirmation in my mind. So not really anything dramatically changing in the energy sector here today, but are carrying over that momentum from that break on Friday. Financials got in on the action a little bit here today after a really nice Friday, carried that over here today. Still like this area, not 100% sold that it's broke out just yet. So I think, again, it's very, very close at 26.47. It's an old an old support level. We've watched it over the last little while kind of be a general area of resistance, probably depending on your rules. Much like materials, a little upward movement tomorrow is going to make me feel a lot better, assuming we are able to break through that resistance. Not really a lot. We will have to deal with the 200, which has had an opportunity because of the way that we've seen the financials develop over the last several weeks to kind of flatten out a little bit on us. We'll keep our eyes on that, but really into that, just below 27.50, where we had our little double top back in last winter, late last year. Really the next level of significant resistance in my mind. Might be a little trickier. Some of these charts aren't quite as appealing from a bullish point of view, to my eyes at least, as some that may be in the material sector. But again, that is my bias, and I certainly understand that. It doesn't mean I'm right. But I do like this to continue to show that strength. Again, no real bearish signals. However you want to read this, a little bit closer to breaking out today, right? Whether you consider it a break or not probably will depend on you, but it's a little bit closer, and a nice little follow through off of Friday's price action. Not really much. We had one of the rare, let's take the day off over in the industrial sector. We didn't do anything wrong by any stretch of the imagination, in my mind, at least, but really just kind of were there. Down 0.04% technically here today. As you can see, not really anything has changed from a technical perspective from where we were on Friday. No real reason to believe that it's going to, in my opinion. We'll continue to watch this area to work into this resistance zone at $76. Maybe it does need a consolidation period. Maybe it does need a pullback. Maybe it's going to get it. Maybe it's not, right? So because you could have made that argument, anytime over the last couple of weeks on the industrial sector as a whole. And well, it's not needed them yet by any stretch of the imagination. Still some room over, in my opinion, to the upside in the industrial sector. Still one of my favorite areas personally. Tech, just like NASDAQ, just having a hard time. The tech, the communication services, and maybe that's one interesting thing about this bullish run that we've been on, especially over the last couple of weeks. Late December, early January, pretty much everything was going up, right? In the beginning of the rally, but really over the last couple of weeks, you've really seen a lot of not much, in a lot of the tech stocks kind of inching up. Intel, Microsoft, they're moving up, but they're not moving up very quickly. In the communication services, Facebook just kind of hanging around, Google just kind of hanging around. So, this area, for whatever reason, this just not really caught the strength, at least as of yet, within the overall market. No surprise we're seeing, the tech sector ETF just kind of hanging. I think you could call it breaking resistance, but we're right there at that 200-period moving average, not really showing any signs of weakness other than relative weakness to, say, the industrial sector. Right? When you compare it, maybe, I think it is showing weakness, but technical weakness, I don't really believe that it is showing it, at least as of right now. A break above that, and I do believe that that's probably the most likely thing to happen. We'll see if I'm right on that one or not, but a break beyond that, I do like this as an area that can make a little bit of a move. We don't really have, how little things, right? A little level of old resistance. Is that a big deal? Well, I don't know, but it's just a little level as far as historically speaking. A major pivot point that at around $72 will definitely be something that we want to keep our eyes on. But we kind of filled the easy space that, we were kind of looking at, several weeks ago, kind of filled that space up. Got a little bit of a fight here. I do believe there's still more upside within this area. It might take the market breaking out. It's certainly going to need the NASDAQ to ever be able to have a chance at making that move. So we'll have to kind of see where this one takes us throughout the course of the week. But just not really an area that most areas have benefited on some level. You just look at so many of the tech and the communication services stocks, and they're not really doing so much wrong. They're just not really doing much. Over in Staples, another good solid day over there here today. I did kind of sell off on the intraday, even before kind of that last 15-minute block of trading after taking out last week's high and closing right basically added a little bit of upward movement by taking out today's high tomorrow. I will look at that as a bullish signal. I'll need it as a bullish signal. Of course, Coke's really, not really done this sector a whole bunch of favors, after a fairly disappointing earnings last week. But overall, the sector is showing resiliency. I still prefer other areas personally to this. But once again, there's really a lot of, there's really no, in my opinion, bearish signals that have generated. I just like some of the room. But beyond this resistance level, and you guys know me, I am nothing if not cowardly, and I'm not ready to say we're above it just yet. There is more room to the upside in this area too. So much like kind of that utilities that we saw when it kind of broke out of its old 55, its old trend line, had a little bit of clear air, a little bit of room to run. This area does too, and that might impact how I feel about it right now. I'm just a wimp, but I'm not sold that it's broke just yet. I don't not believe, I just don't believe, if that makes any sense. So keep an eye on that 55-ish zone and today's high as a little bit of a potential confirmation point is how I will be going about it. Healthcare didn't really get in on the action today. Again, much like industrials, didn't do anything wrong. We did develop a little bit of one of those gravestone candle type of deals today. Not a particularly strong candle, no doubt about it, overall in the healthcare sector. But from a longer perspective, all of the signs continue to show me bullish as we try to work into that 93, 93.50 resistance zone, which I do think we need to keep an eye on that one. Beyond that, a break of that, I will expect basically this to happen again. A break of 93, I will expect to work into the 96. We've got to get there first, no doubt about it. And again, anytime we see a move like we've seen, small pullbacks, if it happens tomorrow, probably shouldn't be terribly surprising, right? I just don't think we're going to get one as early as tomorrow, although I really wouldn't mind that opportunity if it wants to develop from a broad perspective. Over in discretionary, it's basically just one after another, right? We've had this conversation for several weeks now, and not a whole lot changing here today. We did take out this little intraday resistance in this previous one day, but it's been acting, it's been kind of hanging above us here today, breaking and closing above it. Congratulations. That is a bullish signal in my opinion. And now we're approaching kind of the big one, at just shy of 112. That was a major turnaround point. No doubt about it. That is a potential level of resistance that I do think we want to keep our eyes on. But overall, just a little more of the same in this sector, inching its way up. Lots of little fights. Some of them take a little while. It's not been healthcare that just boom, one day it decides to run, or industrials it basically decides that most days. It's just been a little choppier, and probably, in my opinion at least, due in large part to all of the little overhead resistance zones across the stocks within the sector. So we want to keep an eye on that 112 resistance level, no doubt about it. But overall, still continuing to show those bullish signals. So again, a lot more of the same. Even real estate, more of the same, just continuing to inch, right? Continuing to inch up after taking out that high point here last week. Breakouts are still, in play. Of course, real estate stocks don't have a tremendous history of moving a ton in the shorter term as a general rule, but that certainly doesn't mean they can't. Just more of the same. Another good solid day of strength over in the real estate sector. Really not much to say over there. It just kind of keeps inching every day, just a little bit higher. So, and lastly, communication services, again, just much like tech, just having a hard time getting going. Hasn't done anything wrong. All right, showing signals still above all the averages, still kind of marching up slowly but surely, but having a really hard time over the last little bit, really kind of keeping pace, at least in my mind, with the overall market. Some pretty respectable but not terrifying resistance at around 47. Of course, beyond that, definitely some room to run with the way that the sector has gone. It's going to take, realistically speaking, I think, at least a Facebook or a Google getting on a little bit of a run. Ideally both. You guys know how important they are to this sector, but with them kind of back and forthing and not really doing it on one way or the other, just really hard for this sector to gain a lot of momentum. It might need one, if not both of them to. We saw what Facebook's earnings did to it, right? They matter, and they matter quite a bit. A little bit of a bounce back day for Facebook today, at least. So keep an eye on 47. We continue to try to inch our way to it. Who would have thought, real estate and utilities are more exciting than the communication services with the Facebooks and the video game stocks. So we did miss out on the utility sector. Don't want to do that. Just again, more of the same, continuing that break off of that 55 area, closing above 56. We do have resistance, and something definitely worth noting at that 57 mark. Big level of resistance. Big level of resistance. We got a little room between here and there. There are lots of utility stocks either breaking out or threatening breakouts. So it does overall look like a pretty decent sector still. But as we approach that 57, and believe me, we'll talk about it if we do, definitely an area I think we're going to want to keep our eyes on. All I know for sure is the last two times we got there, it was the end of the road. And both times it was a really good run up to that price. So we'll definitely want to keep an eye on that 57 area. But we still have some room. Most of the signals, I believe, are still bullish over in the utility sector too. So, really, just again, it's probably what areas do you like? I'm not really seeing bearish signals generate in any of these sectors still. Are we all going to have our individual favorites for whatever our reasons are? Yeah, probably. Somebody probably likes the utility sector and the staple sector more than I like the healthcare sector and potentially the material sector. And I think that's kind of the market that we're in, but really just no new signals yet, no sell signals from any longer term perspective, in my opinion, have generated. We are working into, and at least in theory, it could probably happen as early this week, as testing some resistance, in particular on the S&P 500. So that's going to be a fun battle when we do it. And hello, Majin, good to see you. I've not seen you for a bit. Great to have you with us here. Hope you're doing well. So another bullish day in the market. We'll get the VIX out of the way really quick so we can go look at the metals, right? That's what we want to look at. So VIX, again, we're really comfortable right now. The market feels like it knows who it is, knows how it's moving, and no surprise, the VIX down a little bit here today. We're continuing to do this dance in that 97 and that 96 range. We did take out Friday's low, did see some selling over on the dollar after breaking that level of support. I'm not going to call that a bearish signal. I wouldn't argue if someone called it a sell signal. I don't think it's an entry into a new bearish trade, but I wouldn't argue if somebody was taking profits off of that. Again, I think we continue to exercise patience. We're going to look at the weekly chart just to make sure we are all kind of on the same page. I mean, we really are sideways, right? We really are. The dollar, we all know the dollar can move. That's not a surprise. But if you kind of look at this bigger picture, we really are in a range. A break of that range, pretty interesting bullish signal. Not really a lot of overhead until we work, close to $100. But of course, we are not there yet. We still got a ways to go. So for me, I'll continue to treat it like I typically treat it, at least as of late. Still sideways, still waiting for it to come out of that longer term trading range. But today definitely saw a little bit of chink in the armor off of the dollar. This is the first real day where it kind of was kind of ugly, on the candle. Even a few days ago when it broke 97 on the intraday and pulled back and closed below it, we've seen that lots, right? That's not uncommon by any stretch of the imagination. A lot of movement, closing near the lows, taking out, a support level, an old resistance level, little bit of weakness, at least short term, that I see from that, but enough to trade to the bearish side. I personally don't believe so. I still believe that you look at this, just let it develop. It will eventually give us that nice break. Over in the metals, just what do you say? Broke out on Friday, took out that resistance level. We had that pullback opportunity, but it wasn't a very textbook pullback opportunity last week, right? But we had it nonetheless, working into resistance, breaking through resistance here yesterday, and really carrying on with that here today. Not much else to say other than just you're a bull on gold, right? So whatever that means is probably enough said. Have a little bit of room until we get into resistance, which is going to be somewhere between 1360 and 1375, in my opinion. Those, that'll be the area that I will be keeping a lookout for. I still overall continue to be very satisfied, like pretty much everybody that I talk to, at least on as a bull for this on metals, on gold in particular. Sometimes it just gets going, right? And this was one of those times. But on a positive note, it's been showing bullish signals for months, right? So odds are either helped you or didn't impact you one way or the other. Hopefully it helped you. I know lots of you have some trades on gold. So over in silver, getting in on the action as well. Good solid day for silver. Not nearly, in my opinion, as pretty as a chart. But again, that's today. My opinion is probably going to change fairly dramatically when and if we break, clearly break what I'm calling 16. I know it's a little higher than 16. That's definitely an area of resistance we want to keep an eye on if we're, in silver right now, in my mind. We know there's lots of history there, even recent history, a deep pullback off of that price point, but still continuing to show overall strength in the metals market. I don't think that's a terribly huge surprise with the way it's been going as of late. Now, natural gas, actually, it did something that might lead to something else in the days to come. We didn't see a dramatic, move one way or the other on the open this week. We're starting to establish a pretty clear little trading range over the last little week. We know we've got a lot of old history at 250 below us, so that's a potential support zone if we break to the downside. And I'm not there yet, but if we can stay sideways for a little bit longer, stay in this range, all you can do is ask, right? You have no control over what natural gas is going to do, no matter how much you would like it. But if we can stay in this range for a little while longer, a break to the upside could be something interesting. I still think, for me at least, I need this to develop a little bit longer before I'm comfortable doing that. But every day that we're in it is one day closer to me saying, yeah, we've been in this range. I can trust a break either way, whether it's to the up or the downside. Now, I don't have a strong opinion either way, which way it is going to break at this point in time. But I do believe if we can stay, and this is really, we've said it in a couple different ways, but really we just want it to go into a little range, right? At least that's what I want it to do before breaking one way or the other. And at least a week of, or a new fresh week starting off in the same range that we were in last week. Well, that's kind of the first step, right? It's going to be really interesting to see what happens if we do go sideways and are able to break out of this, we'll call it 270 level of resistance. If we were able to do that, we'd be above our 9, we'd be breaking resistance, probably see that 9. Again, this is why timing is going to matter. If it happened tomorrow, we'd be above that 9, but that 9 wouldn't have turned over just yet. But if it drags itself out for a little bit longer, that 9 might start acting as a little bit of a support catalyst. This is the first time we have closed above the 9. Interesting, and I'm sure Coach Mark knows this, because you guys know how much Mark likes the 9 EMA. This is the first time we closed above the 9 here today in a very long time. I guess we have to go back into January 11th, it looks like. So again, it's just a thing. I need it to go sideways for a little longer, but we might have some fun with you, natural gas, if you can just last a little longer in that range. We will see. And lastly, over in crude, just a little bit more of the same solid, but not spectacular day here today. Still closing above that previous resistance level, developing some pretty, interesting little intraday highs over the last 2 trading candles. If we look at it on an hourly time frame, kind of one of those high base potential breakout type of situations. If we do break above these now 2-day highs in the days to come, I will consider that a bullish signal. And I do personally expect that if we get that signal to work into this 59 or thereabouts range, it will again depend on when it happens. That old trend line will be, a profit-taking zone, in my opinion, if I, am in or am taking the breakout trade. If whatever my individual methodology is, that for me will definitely be a profit-taking zone. An old support level, an old long-term trend line, and a really long-term trend line in this particular case. But room in between here and there. I do like the way that we've developed these now 2 days of intraday resistance for potential breakout traders that maybe didn't get in the pullback. Hey, if you got in the pullback, you probably prefer it was already at $59 and you were having that discussion, right? But if you didn't, an opportunity to get in through the break of resistance, whatever that specifically means to you, is always a welcome sight. So keep an eye on those highs from the last 2 days. One way or the other should be an interesting fight. Beyond that, there's just a lot of clear air. And that's, of course, always something that I'm interested in, is nothing in the way. Makes it a little easier to potentially fill up that space. At least that's the way my mind processes this stuff. So overall, nice solid day for gold, nice boring day for natural gas. I don't know which one I'm more excited about, to be honest with you. Both of them are pretty exciting. I think, obviously, gold a little more exciting, maybe a little more practical right now than, another day of watching natural gas. Stock market is continuing to do what it's been doing as of late. In my mind, no new signals have generated to make me think that it's done being bullish. We are approaching some levels of resistance that might be some interesting tests, but we'll follow along, see them together. So with that, ladies and gentlemen, wow, made it an actual half hour. When I first started doing the market recap, my goal was 15 minutes because that's about what I kind of go through this process on my own with. And so I thought I could just do it 15 minutes. I learned really quick. You add words and that doesn't happen. So then my goal was 30 minutes, at least for the recap side of things. And I usually don't quite make it. So I'm going to shut up and take the win today. But as always, ladies and gentlemen, it is certainly my pleasure. And it's always great to see you guys, and appreciate everybody's time joining me here live. Or those of you who catch the recording a little bit later, we certainly love to have you guys around with us as well. Be sure to comment if you have anything, if you're seeing anything interesting, seeing things a little bit different than me. I'm certainly always open to another trader's perspective. Make no mistake about it. So you're very welcome, Tanner. It's certainly my pleasure. As always, guys, if you are new around here, be sure to subscribe to the channel and hit that notification bell. And be sure to join us over at Tackle Trading on Twitter as well. Always an easy way for us to share interesting things that we're running into throughout the course of the market day with our team members. So if you ever were looking for me, it's at Frank Martin23 on Twitter. So if you ever looking for me, that is where you can find me. So if you enjoyed the market recap, guys, it is always helpful and appreciated if you do give it a thumbs up, just to let us know that it is helpful. We're on the right track. Let YouTube know the same as well. So thank you in advance for that. With that, ladies and gentlemen, hey guys, as always, it is my pleasure. I appreciate you guys hanging here with me today. Always more fun to go over the market with friends. Make no mistake about it. So you guys have a wonderful Tuesday afternoon. Enjoy the Coaches Show here tonight for all our pro members. If you're not a pro member, send us an email. Team at Tackle Trading. Let's get you set up with the trial membership so you can come check it out. I think you'll be happy that you did. But I will see you guys same time, same channel here tomorrow afternoon. So thank you, everyone, so much for your time. You guys have a wonderful Tuesday afternoon, and I'll see you tomorrow. Bye, guys.